home, home on the range. All right. Good morning, everybody. This is Dr. Chef's Crypto. I'm Dr. Chef, and we are getting down with our daily analysis. And of course, you see my little graphic here. I'm supported. I hope that doesn't stay too boring, but I hope it doesn't get scary. Just why I'm having this little class right now. As we sit here, we're what's called testing the bottom or testing um, support. So we'll talk about that in a second. But home on the range, as you remember from the basic training class, a range is when you're traveling what they call trading sideways, which we've been doing now for about 3 weeks. We've been trading sideways. Everything's been very low key. For those of you who know that I am at the Briarhurst Manor, which has its own episode of of the Ghost Hunters, you'll realize that the blinking light is some very weird stuff that happens around here. So please forgive the blinking light. And let's dive into it. So let me start with the disclaimer. I am not a financial advisor. This is not a financial advice. Do not live your life by someone who is sitting in a haunted room in an ancient mansion singing Home on the Range. You know, just that's the only advice I have for you is don't take advice. So, um, with that irony out of the way, we will continue our adventure into the world of crypto. In this case, we are looking at this today. You can see the range continues, and now, I mean 3 weeks, but look at what's happening right now as we speak. Let me explain the details of this to everybody that's just kind of getting, is new or working on this chart reading. This is the big bottom dropping out section. 4 red candles, 3 of which are big, 1 of which is gigantic. This is May 18th. Okay. The bottom here is coming in around 30, and the tops here are coming in around 40. This gives us what we call a range between 30 and 40, with 30 being the bottom, or what we call support. It tends to bounce off of. The top being what we call resistance. It tends to bounce off of. This can't continue forever, although it can continue for quite a few months. It may continue for quite a few months. Right now, you see where we're at. We're here, which is this low red candle. We got 2 reds in a row, and actually 4 with a very tiny green hiccup right there. I mean, this is 4, and 2 of them are a little larger, not gigantic, but this could be a bad sign. Because we have 4 red candles in a row, because they're all trending down, because they're all lower lows and lower highs, there is a chance that we're about to break out to the negative. We don't want that to happen. We hope that doesn't happen. But you can see the bottom here. So we call this testing the support. All right. We're in a range. We're trading sideways. Now we're testing the support. If this continues down, and say this evening or tomorrow, we break the support level, which would be 30-ish, okay? If you see any 20s, 29, 28, anything at all, it means we broke out through support. This is bad. This means that the support could possibly even become a new resistance level, and we could continue down and stay in the 20s for weeks or months. Doesn't mean we won't break out again. Definitely tracking that low, you're going to want to probably buy. But it'll probably bounce. What'll probably happen is it'll bounce off of the support level, right? So we're at 32,950 as we speak at this exact second. So we're not to 30 yet. We're only at 32. No reason to panic, okay? If we drop below 30, we will have broken through the support and we're probably headed down further. If we bounce off of it and head back up, then we're staying in our range, we're staying in our sideways trading, and everything continues in this consolidation phase. As long as we're between 30 and 40. If we break out above 40, then we've broken through the resistance. The resistance can then become support, and off we go up again. That's how it works. That's how tracking this works. It's a very simple concept once you get it. But this is the Bitcoin chart, which, of course, as you know, we look at as a guiding light for the majority of crypto. It is unfortunate that everything is not more independent and things may change over time, but this is where we always start. Now, we get out of here and we go over and we change, and let's say that we decide we're going to change, and this is probably happening under my picture, but we're going to change to Ethereum, take a look, and we're doing the same thing in Ethereum, and we're at 25. You can see the same pattern, right? Whoa. You can see the same pattern is happening. Get over here. This time we've got 2 red candles. We are not nearly as low. Our bottoms are 1730 right here. So something in this 17, 18 range is a bottom. So you can check this on your chart. Topping, so our range goes from about, we'll call it 18, 19, right? About 18, up to about, say, 29, okay? So once again, we're looking to break through about a 29 level. So if you ever see 3s in your Ethereum, 3,000 something, you know that we will have broken through the resistance and we'll be on our way skyward. And likewise, if you see it down below 18, you know that we have broken down and will continue down. But notice that this chart is much better than the Bitcoin chart. There is a difference in these coins, and there is a difference in how they act. It tracks together. I mean, obviously the drop is at the same time, and you know, this is the same giant candle on the 18th. This giant red psychopath candle right here is also 18 May, just like on Bitcoin. So they track together. But notice that that Ethereum is holding stronger in raw mathematical numbers, right? This is staying higher in this range. It's really bouncing back and forth over 24. This is really 24 to 29 with some of these lows and this big green pop back up and this big green right here. So you don't have to necessarily go all the way down, although I would recommend, you see how these other levels over here do the same thing. I would think of this 20, you know, this basic 2000. Plus, don't forget the psychology. Don't forget people. This 2000 is a really serious level in Ethereum because it almost never over the last few months would go below that. 2000 is like hard granite support. If it ever busts through that, it's a bad day. It's a bad day. But we've been, you know, there's no trend right now. We're not trending up or down. We're just in this range, trading sideways. But 29 is the top of this range. That's the resistance level. So think about it like this. Really, if you see less than 2,000, you're definitely headed down hard. And if you see more than 3,000, you're definitely headed up hard. And that's your way of looking at Ethereum. If we go over to something else, let's switch to ADA. Let's look at Cardano real quick. And you're always going to have a similar pattern in all these things, right? Because like I said, they all track with Bitcoin, even though we don't like that. And so that giant red is definitely the 18th of May. Yep, just like it's supposed to be. So we're tracking the same basic. But look at this. I want to point out something about Cardano. This drop is a little more shallow, even though it's the same type of drop. It's a little more shallow with a little bit quicker recovery. It's not as devastating percentage-wise. A little bit quicker recovery. Lots of big green candles. And this is holding relatively high. So look up here, all-time high of 24. You really got a top of about 2.3, right? And then your resistance level is 185. I mean, that's not bad. The bottom is 1.4, right? I'm talking about, in this case, 1.4, like $1.40, $1.39. The big bottom is $1.30. So our severe support level is in the 130 range. If we ever break through the 130, you know we're crashing hard. And your top right now is the 180, 180, 190 range. So $2 is a really good point to think about as your sky's the limit number for Cardano. If you break through that 2, you're shooting up. You're in a major uptrend at that point. But right now we're ranging from basically 140 to 190. That's basically the range. Right now we're sitting at 153. As we sit here, we got low levels of trading, low volumes, and we're just kind of ranging along. So you see how they all kind of match in a way, but at the same time, they match, right? But not perfectly. So you still have opportunities to track and understand more about different coins, even though you still remain in a world. It's like that old saying, it's Bitcoin's world, and we're just living in it. Okay, um, Bitcoin runs the show, as Charles has pointed out before, and many other people. Bitcoin should not be running the show. It's old technology. It's weaker in almost every respect, except it's just valuable. It's the OG. It's just valuable. It's going to stay like that because it's the OG, because it's the original. It's just the OC, I guess, the original crypto. It's just going to stay the most important for a long time. I don't know. Maybe this switches at some point, but at where we're sitting now, Bitcoin rules. It's not that it rules because it's a better system. It rules because it's what the large organizations and governments are following. Therefore, if a bunch of big whales or a bunch of big organizations or companies are dealing with stuff, they're dealing with Bitcoin typically. They dump it, or they talk about it, or they decide not to accept it at their business, and it shifts. And when Bitcoin shifts, the market shifts. So having said that, we want Bitcoin to succeed. We want a major, beautiful, wonderful Bitcoin world, because in a Bitcoin world where Bitcoin is succeeding, the rest of our stuff will therefore succeed. I'm going to check one that's totally unusual just to see. And look at that range right there. It's the same story. But I want to point out, this one dropped here. There's your 511. There's your 518. And we're settled into a range. This is VeChain. Um, it's not as big or as popular as a lot of the other ones, but I wanted to check it because I have the shirt on today. Um, I like VeChain. They were recently pulling some plastic out of the ocean, and they may be the key to China. We'll see what happens. But right now, our range is in the 0.09 to 0.15. We're ranging there. We're sitting at about 0.11 right now. So once again, we're not testing the bottom yet, but we could. You're looking for a 0.09 here. So anything less than a dime on VeChain is dangerous. You could be breaking south, and anything, closer to 15 cents is a breakout to the north. Of course, our all-time high is 27. Obviously, we want to break a quarter and keep going up. I love this little crazy top range right here. This was a good day, set of days right here. This was kind of fun. Anyway, this is an interesting red candle. It's a tiny candle with a giant wick, and the wick goes very high, but it's red. Fascinating little chart right here. This is a big old green day, 415 right there. Anyway, we're sitting in this range on VeChain. And so the reason I'm showing you all these charts is so you can keep practicing on how the charts work. But basically, the reason is we're tracking the same range. VeChain's tracking much flatter than most of the other ones. But everything is in this range. Everything is, home on the range, basically. So, there we are, home on the range. So, we may end up during this day, because it's very early in the day, we may end up what we call testing, or we are about to test the support, test the bottom. If we break through that bottom, we're in a downward trend at that point. And if we bounce back off the support and come back up toward the resistance, we're continuing in this zigzagging consolidation pattern, which is just going to keep ranging for trading sideways for the immediate future. That's where we are today. I know I'm a little bored because it's just ranging. It's not exciting, but that's okay. This consolidation phases are very important, and we'll see. If it breaks down, it's an opportunity to buy. If it breaks up, it's an opportunity to make money. So we're just waiting patiently. It could be weeks before this breaks. It could be today. This is crypto. You never can tell. All right, this is Dr. Chef. Have a fabulous day. Enjoy your wonderful Tuesday here in June, and I will see you all very soon. Thanks.